Yo, what's up? Welcome to Legacy Mindset Podcast. We back at it again with another episode.
Yes. Do us a favor and hit that thumbs up button. That little bell icon. Like and subscribe to the channel. If you haven't already done so, it shall be greatly appreciated and you are welcome to.
Yes, sir. So in this episode, we're going to be talking about stock investing strategies. You know, some of them like dollar cost averaging, high cap stock versus low cap stock, dividend investing, mutual funds, ETFs. So hopefully you guys get some value out of this episode so that way you can start your journey and learn more about investing into stocks and the crypto. So we're going to be using Robinhood just to kind of show what's out there so that way you can have some awareness.
When I first started, I was trying some of everybody's strategies.
Yeah.
This person, that person from on YouTube. And I'll be honest, man, it's difficult when you trying to take bits and pieces from everybody else and you first start out. So I want to say it took me some time, took me a couple years, but when I started really listening to what God was putting in my spirit and the strategy that God put in my spirit, then that's when the light bulb started going off and I developed my own strategy. So the best advice I would have really is to follow. I put it to you this way: follow your first mind, which is the mind of God. You definitely have to do your due diligence, your homework on these companies out here. And once again, like you said, if you wear Nike, look into Nike.
Right.
And be a long-term investor. And once you learn how to be a long-term investor, then you can mess around with, rinse and repeating, day trading, options and whatnot.
Right. Yeah.
Because I'm telling you, it's hard to, you have to come up with your own strategy.
Right. Yeah. So like we're going to show some strategies. Like, I mean, we preach all the time is to do long-term investing. So that is a strategy in itself, is having that mindset of if I enter into something, I'm analyze it in a long-term scale instead of, short-term within a month or 2 months, time frame. So when we looking at some stocks or cryptocurrencies out there, we looking at what is the potential growth, what is what is it supporting? Is it an infrastructure play, meaning that it's something that is being built to support an industry, right? So dollar cost averaging. You want to give a quick explanation of that? What is that, and why is it beneficial?
I think, and I want to say this. I think a lot of people kind of like have the wrong interpretation of dollar cost averaging. I mean, yeah, it sounds straightforward, but at the same time, when you dollar cost average, you actually putting what you can afford to put in a certain stock. It don't matter if you buying like the whole paying the whole price for the whole share. Let's say, for example, you got Tesla at 330.
Right.
And to dollar cost average into Tesla, let's say if you had $200, well, you want to put in 100 because Tesla could still drop, and then you put in that other 100. So when it comes to this dollar cost averaging, you'll do it at any price. Most people, that's what they put out there. But I'll be honest with you, that's a part of manipulating the market, because if you putting in at 330 and it run up to, let's say, 400, and you put the other 100 in, to me, you getting played, because the object of it anyway is to buy low so you can set yourself up to sell high.
Right.
So that dollar cost averaging to me is like a tool that big money used to manipulate retail investors.
Right.
So I would personally say, I mean, I don't really dollar cost average. I buy the whole share, you know what I'm saying? And I'll buy it at the right price for me. You know what I'm
Yeah.
saying? Like as far as you, son in love, like when you when you look at dollar cost averaging, you may look at it a little bit different than I look at it. So
Yeah.
with that being said, just share with the people like your interpretation of dollar cost averaging, because really at the end of the day it's left up to the interpretation, even though you hear dollar cost averaging sounds so straightforward,
Yeah.
but it's definitely a catch to that thing.
Yeah. I mean, yeah, it's something similar to how you explained it. If we, stick with Tesla, if I'm getting into Tesla, I'm not really worried about where it's at today, or
Yeah,
tomorrow, or in the next month, because I want to set a schedule of when I get paid, or when I have some money. I'm gonna go ahead and put in, let's say if I'm budgeting and I want to put in $100, right? So I'm gonna buy in at when it's maybe, if it was August 29th, right? It's $333, right?
right.
I'm not really worried about, whether it goes up or down, because my main goal is just accumulating multiple shares.
Shares.
Yeah. Multiple shares of this of this stock. So,
Right.
if I come again and I get paid next week and it rolls up a little bit, you know, my average cost probably went a little bit higher, but I'm not
Yeah.
really too concerned about that. If I keep going on, and as the stocks get a little bit higher, I'm making some capital gains on what I put in back in August. If it came to December 23rd, but you see that it's coming down again by April 8th in 2026. My average cost is going to be around that I would say 400 range, because it got to the high of like 489. But I would say it's good for beginners, because it takes the emotion out of investing and having to put money in and take it out when you think a stock is going to fail. If you pick a good stock that is high cap, like Tesla, or Google or Nvidia, and you try to accumulate stock shares, over time, you're gonna beat by default, dollar cost average into it anyways. So that's it's kind of similar to what you said. If I have enough money, if I'm not even if I don't have $100 every week, right? If I got $50 the next week, I'm still gonna
Right.
buy it. You know, I'm still gonna buy it. I'm not gonna worry about maintaining that $100 every week schedule if I don't have it.
Exactly.
So it's a good way to just to get that repetition and get accustomed to just put money into stock. It helps you practice discipline, I would say.
That, yeah,
Yeah.
discipline, and the fact that God will use the market to teach you. And
Right.
like you said, for beginners, this is good information, because the simple fact a lot of people, they don't know,
Right.
and you'll find once you start like this, you'll probably grow into an investor that start to look more at uh hopping in at the right price exactly, as far as like, then it's like you might change your mind and say, well, you know what, dollar cost averaging, it's okay, but
Hmm.
I'll do this, because I'm gonna tell you, not like for us, for example, with Tesla, we got shares of Tesla at $172 a share. We,
Right.
as a long term investor, if it come down, if we have a crash and it
Hmm.
come down to that, then guess what? We'll add to our position. You
Right.
know what I'm saying? So yeah, I've done that dollar cost averaging, man.
Hmm.
It's almost like doing fractional, just like with crypto. You see
Right.
what I'm saying? Now that is it's a whole different ball game, because that crypto, that fractional, some coins you definitely can buy a ton of them, and then others such as Bitcoin, unless you got that money laying around $70,000, you gonna definitely put in what you can put in. And
Right.
I want people to know, that you can put like $2 into Bitcoin, and dollar cost average as much as you can. You don't have to just put $70,000 on there.
Yeah, it's building that nest egg and watching it grow, over the long run instead of the short term. So yeah, so that's a
Right.
quick, easy strategy, and another one I want to get into for investors that are new or starting off that really know what stock to pick, choose. They have this great thing called ETFs, right?
Yeah.
Exchange traded funds, right? It's basically creating a basket. It's a basket of stocks that is handpicked by, you know, highly smart people to, basically
Invest.
highly smart investors.
Big money wigs.
Yeah, yeah. They big money wigs, they come in and look at the market and say, and they handpick, a group of stocks and they put it in like a basket. So if you don't know what stocks to pick, you can always look into an ETF and put your money into a ETF, or I would say too the S&P 500 is another one. So
Yeah, index funds. They
yeah,
all
index funds.
basically similar when it comes to that. I mean, that's really like playing it's definitely like extra safe. When you buy like ETF index funds, your best bet is to look into the different types of ETFs, index funds. I mean, they even have them with crypto now. So,
Yep.
you know, you can look, and then some of them you go as far as like when you do your homework and you do diligence, they pay dividends too. A lot of that you might want to, as a new investor, just do your homework and your due diligence. It's as simple as Googling, typing in different index funds, ETFs, crypto indexes that pay out dividends, such as BlackRock, Kathy Woods, and ARK Invest.
Hmm.
They actually are very well known for these type of equities, or shall I say, index funds and ETFs. And some of them pay dividends, some of them don't.
Right. Yeah. So I
But
like to go over here on stock analysis. If,
yeah,
if we're talking about dividends, because I can see
there
um
you go.
what type dividends or how much they pay out.
Yeah,
So if I go like another one like Vanguard S&P
yeah,
500,
VOO. Yeah,
yeah,
ticker symbol.
yep, ticker symbol, VOO. They even tell you what the dividend yield is. Um, so this pays out every quarter,
Yeah,
quarterly, 3 months. So
yeah.
they pay out 1%, 1.09. So that's like you said, it's safe, right? It's
I'm glad you pulled that up.
hmm
I'm glad you pulled that up because I'm looking at that price.
yeah,
And this is true price, 656.42. It may fluctuate up and down, but a lot of new investors will look at that and be like, man, I can't afford that. And I say, yes, you can. Just like we're talking about dollar cost averaging. You can put in what you can afford to put in. You can have like a platform like Fidelity or even Robinhood or something like that, and people don't, a lot of people out here that don't talk about the stock market or crypto, the first thing they want to do is look at the prices and say they can't afford it. How many times have you had something like that? You
yeah,
talking to a person on the job or something like that, I can't afford it. Yes, you
yeah,
can.
yeah. Well, with the new with the new regulations and the new I guess technology, you could buy fractionals, right? So I mean,
Right,
even though you don't have $656 right now, you still could put $10 in it because you'll get a fraction of that stock or that
right,
share, fraction of that share.
right,
So um I mean, I would say maybe 5 years ago that was impossible. You had to
right.
like buy a full share, right? So
Yeah,
you know, do your
right,
due diligence, use the tools that's out there, right? Use AI, right?
right.
Yeah, if you got to use AI, it'll help you. So if we go back into ETFs, I like Robinhood because it allows you to have a list and search like different ETFs. If you just type in ETF, if you come down to the list area, you can see like index ETFs. What we were just talking about, S&P 500, and
Yeah,
they got bond, even got sector.
yeah,
All right, let's go into sectors, right? As another strategy. Um, let's say the difference from a regular index versus a sector ETF, right? The sector follows a specific industry. So if you want to get into like utilities or energy
or
sector,
oil,
oh yep,
yeah,
oil sector, what else?
silver, gold,
Yep, commodities.
yeah,
We even got AI sector maybe that's out there.
yeah,
Let's see. Yeah, AI
tech,
sector, tech sector. Yeah. So like say if you don't know what to buy in a particular stock, you have ETFs for that particular sector. So you can just go ahead and click one of these and analyze it. You
yeah.
know.
Really, what you love, you know what I'm saying? Look at like if you love tech, then you looking at what like really a lot of people say that Tesla is a tech stock,
Mm-hmm.
but at the same time, it's I think so because of everything that Elon Musk is involved in is considered like a tech stock.
Yeah.
But then you got Nvidia. You just look at those different companies and find the right ETF or index fund that's for you,
Right.
especially if you're looking for a dividend paying ETF or index fund.
Yeah. I guess another one, mutual funds. So mutual funds, I would say, they're more focused on like retirement. You know,
Yeah,
they're those are their mutual funds are mainly with like your Fidelity or your Charles Schwab. Those out there that have 401ks. When you put your money in, of course, that money you put in the 401k is actually being put into mutual funds as well. You know, so
yeah.
so
They charge you a fee for that for the
yeah,
mutual fund.
yeah. So those comes with more fees because that's
Yeah,
more managed by those
the actual brokerage
yeah,
company.
brokers. Yeah, so they managing it, and so they got to get their fee for help, building your account up to for your retirement. So that's kind of like the same thing as like ETS or basket, but they're gonna manage it for you. So that's it.
Exactly.
Yeah.
And now that you say that too, though, notice this: those same companies like Fidelity, Vanguard, Charles Schwab, these the big
Mm-hmm.
dogs. You know what I'm
Right.
saying? They got their hand in everything.
Right.
So imagine that they're managing these funds, but then they have these other funds on the side,
Right.
like the ETFs or whatnot, to whereas you can manage them yourself. But a lot of people don't because they feel like, hey, I can't do that or I can't afford that. But I'm here to tell you today, man, you can manage these funds yourself and save that extra money and put it towards your investments.
Right.
Because why would I want to pay? I mean, and I'm not telling anybody not to, if you're not confident enough to manage your own, by all means do so. Allow Fidelity, Charles Schwab, or, whichever brokerage company you go through, allow them to manage it. But what I'm trying to tell you is that you could manage these things yourself. You just, I mean, like I say, God will use the market to teach you if you jump in
Mm-hmm.
and allow yourself to be taught.
Right. Yeah. Just looking it up, and then if you need to get to need to talk to an advisor, definitely pick up the phone, call. Shout out to Miss Rebecca for our last guest.
Yeah,
Helping us and blessing us with her knowledge on investing and retirement. If you haven't watched that video, go check it out. Our last episode number 7. A lot of knowledge he dropped in that video. So go check it out.
right.
All
But
right.
once again, like you said, people they have to for those who um, um, seeking to learn, hey, I stay on Simple Street. And I'm gonna tell you now, simple is where you should always start with investing. And to be honest with you, stay on that street because investing is that simple. The thing about it is we all uh seem like we all start out with difficult street because difficult street is where you don't have the knowledge, but you're trying to get the knowledge.
Yeah.
So once you begin to get the knowledge, you'll find that, oh, that was simple. That was easy. So now you're on Simple Street. Stay on Simple Street. So get off difficult street and work your way to Simple Street. So start out small, get an understanding, get the knowledge, the terminology. It's just like starting at a new job, day one. Until you really pay attention and see and learn how to do things and what you should be doing and how
Yeah.
you should be doing it, that's when you off on your own and you can do things and you like, man, other new people come in and you look at them like, oh, that's easy. Let me show you.
Right.
It's the same way in this stock market. That's
Yeah.
easy. It's easy. You'll get it because everybody's risk is not the same. Everybody's risk tolerance is not the same. You know why? Because everybody's pockets ain't the same.
Right.
You know, this person over here may be able to afford to lose, and that's one thing we should say.
Yeah.
You know, don't put in more than you can stand to lose,
Exactly.
and don't let that scare you because that's simply telling you pay your bills, make sure you taking care of everything as far as your household and stuff like that, and what you have left, don't put the whole farm in there. Just, you know what I'm saying? You either use dollar cost averaging or just, put in what you can afford to put in, that if you did, the market did a crash or a huge dip, you won't panic. You
Yeah.
won't be scared and mess around and sell everything. And that's the only way you're going to lose money.
Yeah.
You got to hang in there.
Yeah. I would say too, risk tolerance for younger folks, you could take more risks, right? You got more time on your side. So to start getting into more advanced strategies, and trading options and get into IPOs, putting your money into unproven companies, right? So
Right.
it's as starting off, for a person that's younger, they can probably withstand those, losses versus someone about to retire in the next 10 years or 15 years where they got to start building up their nest egg and have it safe basically. So you want to put it
Exactly.
into higher cap companies that are well established, infrastructure is going to be here for the next 100 years and you know that it's going to grow because everybody and their mama is using that company for XYZ. So,
Right.
yeah, so
I,
you just got to know your own risk, know your own pockets, and don't try to keep up with the Joneses, right? Don't try to see someone putting in $1,000, 200,000, 20,000 here, and thinking you gotta put all your money in. Now you back late on your rent or your mortgage or whatever, and you put you in a bad spot. And you always never want to put in money that's used for bills. You know,
right.
trying to be aggressive and putting in 2-3 thousand when you got a mortgage coming up or you got a car note or something. Don't neglect your other bills
Right.
when you're building, right? So yeah.
Exactly. Exactly. And and also I want to add that when it comes to investing now, like you said, uh, it's a second in a lifetime opportunity
Sir.
to build some real, true generational wealth. Because cryptocurrency, I like to say it like this: God has blessed us with two markets. We have cryptocurrency and we have the equities. The thing about it is, now I'm not a financial advisor, but I would say to focus a little bit more on the cryptocurrency than the equities, unless you're investing in crypto right along with the equities that have like innovation. Their focus is innovation. So they're big on AI. They're big. They're actually building a Bitcoin or Ethereum cryptocurrency treasury. Listen to these keywords: crypto treasury, Bitcoin treasury, Ethereum treasury, because these are the companies that ain't going nowhere. These companies aim to be even bigger than what they used to be, such as Google and Apple. But then you got Tesla that then came up. You know, you got MicroStrategy who has come up, and I'm telling you, this dude and that company is buying their treasury of Bitcoin. If you do your homework, you'll find out that I'm telling you the God's honest truth. They have like 800,000, a little over 800,000 Bitcoin in their Bitcoin treasury. They aim to be one of the largest crypto banks in the world, and Bitcoin is their focus. And I'm telling you, and if they spending millions and billions of dollars on Bitcoin, why wouldn't we get our portion?
Right. Yeah.
And their goal is to get a million. And I feel like they can have that before the year's out.
But yeah,
Let's get it, dog. Let's get it.
yes,
people.
sir. Get out there, do your due diligence. If y'all need help, let us know. Join our community. Put it in the comments.
Yeah.
This has been another good episode. Legacy Mindset Podcast, the way of life, the way of living. We gonna keep going, dropping more knowledge. And like I said, like and subscribe to the channel. Put down in the comments. We love to hear from you guys. It's your boy E and your boy R.
It's your boy R. EI in the house.
Yeah.
I was waiting for that.
All right, shoot. All right, peace.
Peace.